Welcome to a quick message from me here, the investment trainer, also Black Creek Wealth Management. Hope you all are having a wonderful Thursday. Wanted to talk to you a little bit about something that I've been thinking about this year, and I'm entitling this one "Run Your Race." So, what I ultimately mean by "run your race" is this: this year is going to be choppy. Whether you're an investor, whether you're a trader, it really doesn't matter. Well, I shouldn't say that. It does matter. If you're a trader, it's going to be an incredibly interesting year. If you're an investor, the biggest thing I want you to just take away from what I'm going to say today is time is going to get us through this. But before I get into all that, let me just go ahead and say, thank you all for allowing me to serve you, being able to be here for you, and I take it very seriously that I get you through these difficult and good periods to maximize what you're trying to do with your goals, grow your money, and ultimately continue to thank you for allowing me to help you. So when we look at what's going on with Run Your Race this year, again, like I said, it's going to be very difficult to navigate with just conflicting information coming from various sources, whether you listen to CNBC, whether you have some talk news radio, whether you intermittently look at the stock markets or bond markets or currencies. Things are going to be all over the place, okay? Because ultimately there's different agendas, in my opinion, whether it's political, whether it's financial, economic, whatever it may be. I'm going to treat this almost like an Oreo cookie. We're going to have some good, a little bit of some bad, and then we're going to end with some good today. So let's start with the good. Unemployment is way down, right? Economy is doing well. They've continued to add private jobs. People are getting back to work. We are at one of the lowest unemployment numbers that we've had in a very long time. Things are getting better. Okay. I'm going to go into on a weekly basis, moving forward, starting next week. Okay. Here's what's going on this week for my traders. If you want to know from a longer term perspective, again, I'm going to address that too. Through investing and how these numbers actually play into longer term, where you should be and when you should be there. So overall, what I want us to, again, look at today is where are things at? Where are they going to be? What are the main drivers and risks that we have going on this year? Well, you should know that overall, there's a lot of potential risks out there. Okay. And what I mean by that is there's inflation, there's interest rates, you have supply chain issues that still continue to be an issue, not necessarily because of what's going on here in the States, but because we have so much stuff produced overseas. People are going through COVID lockdowns, restrictions. Again, we have the benefit of the shot or the number of shots to help us kind of get us through all of these things, whether the shots are there or here politically, whatever. The ability for us to get shots and to be able to push through versus countries that don't have it is causing some supply chain issues. The other thing that you need to take into account is the United States is a service-based industry. We've always been that probably since the early 90s. So the last 40 years, gosh, that's crazy. That's not right. Last 30 years. Sorry. Last 30 years, we've started to move from a production manufacturing to, hey, you need help with something, I'm here. It's service-based, again, tourism, all those kind of things, right? Well, what happened last year in 2020 is we weren't able to take any experiences, right? We weren't able to really do any services and get out there and do those kind of things. So the United States moved from a service-based economy to now a goods-based economy. Well, that's great if all the goods are produced in the United States, but it's horrible if they're produced overseas because now there's a lag time from it getting from them to us. Go out and try to buy a washing machine, try to buy a dishwasher, try to buy anything that's made overseas. There's a hiccup, supply chain issues. They're waiting for all those things to come back. So long story short, the economy is still doing well. However, there are hiccups and risks in the way. You take the psychological aspect of the market, right? If you haven't got a chance, take a look at how the S&P 500 has been up almost, it's north of 25% year after year since the last 3 years. So since 2019, the S&P 500, which is the largest or should say the top 500 companies in the United States, is up almost 25% year after year after year. I think it's a little bit higher than that. So of course, psychologically, we're like, oh my gosh, it's got to correct sometime, right? You think about the NASDAQ, which is, and I'm talking about the top 100 technology companies, is up 85% over the last 3 years. So again, hammer. It's got to pull back, right? So again, right now, the biggest things that is out there and the concerns is inflation, interest rates, and this stock market feel that we have. So why do I say run your race? Because when we look at all the risks, let's take all the financial and the economic and all those things out of it for a second, right? What's happened over the last couple of years is we've had a huge run up. So if this hasn't happened in your financial life, it's about to happen. Is you're going to talk with friends, coworkers, all these people saying how wonderful everything's been. Everything's great. They're going to probably run with that story until the end of this year, right? If you have somebody who's so heavy technology, if you hadn't noticed this week, let alone yesterday, the market, should say the technology was down about 3, almost 4% yesterday. So you're going to have people that are going to tell you stories about how wonderful they're doing, or if you can find somebody who will give you some war stories and say, hey, you know what, I was doing really well, but now, I'm not doing so well because things changed. If you can find one of those, they're an anomaly because everyone wants to know about the millionaire next door, right? So when I look at this year is going to separate winners and losers. I really, truly believe that. You may have heard the Warren Buffett quote. He's very famous for saying this. It's only when the tide goes out do you see who's swimming naked. Okay. And to me, what that means is ultimately when you're in an up market, you can throw darts at a board and you'll hit it and you'll see the returns and everything will be great. However, GameStop, meme stocks, heavy growth, Shopify's, Roku's, those kind of companies that for different reasons have high growth multiples are really going to have a challenge this year if they haven't already seen the challenge. And now it's time to correct, as Roku, just to say an example, is down about 65% since its highs. So when I get down to it, I look and I say, okay, what can I be doing this year? And that's really where I get back to run your race. And I will tell you, I hate running just in general, but I like the results that come from it. And this is where I'm going with this. So there's many times when we run, we've tried to determine what pace, time, all these kind of things. Should I be at a 10-minute mile? Should I be at 11, 12, 13? If it's 70 degrees outside, I'm going to be faster. If it's 90 degrees outside, I'm going to be slower. This is what's basically going on in the market right now is last year it was pretty cold and you were able to run a little bit faster. This year temperature is going to run a little bit hot. So you might not be able to run as fast, right? But you're used to getting those old returns. And throughout time, the market has returned about 8%. Okay. It is averaging over 15 to 16%. If it continues going, great. Absolutely great. The concern that I have is with these risks, inflation, interest rates. These are things that we haven't seen since Reagan, since raising rates. I mean, he cut taxes, but we had high inflation going back to Eisenhower. So not to say that we're going to have those things, and those are reasons why I pay attention to it on a daily basis, is to see what is the noise telling me and what is actually the truth. Okay. So when I say run your race is if you're a 10-minute mile person, don't try to run at 8 miles an hour this year. If you're a 14-minute mile, it's okay. Run your 14-minute mile. If I relate this back to return on investment, a lot of times we're all conservatively aggressive, right? And I hate using adjectives, but I'm going to use it here. You want all of the upside and none of the downside. I am right in that boat with you. And that is why the way I build things is protection first and then take the action afterwards. Because if I know my house is protected, if it's got the right insulation, all those kind of things, and a storm comes, we're good to go. But if it's beautiful outside, I can open some windows and have some fun. This year, my belief is that I want to make sure that everybody has an insulated house, because the market's going to gyrate much quicker. It happened this week with the Fed. There was a lot of uncertainty. So things got dicey, people sold, and it is what it is. So the concern that I have, again, getting back to the good, bad, and good, this is some of the bad that's out there is there's noise. It's going to cause you to make knee-jerk reactions. Not saying you need to put your head into the sand, but I'm saying you need to know what you own. A lot of things I'm looking at is healthcare, technology, consumer cyclicals, financials, because interest rates are going to go up. That's going to help their net interest spread. There's a lot of positive there. Okay. So here's some questions that I want you to ask yourself. Okay. As we go into this year, and if we have not talked about this, I want to do it at our next meeting because this is my mindset for this year. Okay. Do you know what your ideal or optimal pace is that you should be running your race, right? Is it 5% a year I need to be successful? Is it 8? Is it 10? Is it 15? Let's define that this year. Okay. If you don't know, I need to make sure you know, because we can build around that to insulate and make sure you're protected. Okay. Do you have a running buddy? So I like to run with people. It keeps me on pace. It's my whole mantra around even the investing, right? I partner with you. I'm here to help you be successful and make sure you're running your race. Okay. So if you know people, and this is one thing that I'm asking of you, if you know people that need help and they're looking for a running buddy to help them get through it, and they want to be a name and not a number, let them know about me, please. Okay. Also, when was the last time you looked at your equipment? All right. Make sure you don't have holes in your shoes. You aren't showing your rear to the guy behind you because you got holes in your pants. Okay. Sorry. That's the way my mind thinks. What I mean by that is, what are you invested in, right? I know, obviously, if I'm handling things for you from a trading or an investing perspective, I know what you have. We just need to review it so you know what you have. But if we're not on that relationship, or you just want a second set of eyes, give me a ring. Let me help you make sure that you're insulated this year, okay? And then, of course, it goes back to the question of, do you need, ultimately, what is the number that you need to run to be successful, right? Do you need 8% a year for the next 10 years so you can retire, so you can pay for your kids' education, so you can create that legacy? What is it that you're trying to do, okay? So at the end of the day, the biggest thing that I want you to take away from today is again, the economy is running really good. We're at near highs. We were at highs 2 weeks ago. With the pullback the last couple of days, we've basically dropped 2 weeks. Things are still running well. What I'm going to be doing is now that I've seen confirmation of interest rates with the Fed, I will be shortening all of my duration when it comes to bonds, CDs, cash, anything like that, as short as I possibly can, to be able to make sure that if interest rates do go up significantly, I think they're going to go up to about 2.25, probably by the end of this year. So that's 50 basis points or 0.5%. So 0.5% rise from where they're at right now. They're at 1.7. So I think it's going to go up about that high. We may overcorrect, go all the way up and then come back down. But I think by the end of the year, we're going to be at 2.25. So I want to make sure if you are in bonds, you're not feeling that price drop, even though, again, from an investing perspective, you're still getting 1.5 to 2%. So it'll offset. So you may be down a little bit on the bonds this year, but it's a good ballast to keep, the good and the bad from getting too out of control. So I'm going to shorten duration. Again, I'm shifting a little bit more into financials. I've already started doing that. Technology is still going to be there. That just has to weather through the interest rates. People are still very vested in Apple, Google, Amazon. These are industry leaders, Salesforce. They're all industry leaders doing what they need to do. So there's just some consolidation and correcting going on from a trading perspective, not from an investing perspective. So at the end of the day, these are things that I'm doing to make sure that you are protected, but also to make sure that we're still going to make some money, and we're still getting you closer to your goals as quickly and safely as possible. But again, I really appreciate the trust. Thank you so much for allowing me to help you. If we aren't in some sort of closer relationship and you want to be, please let me know. Next week, I will be starting weekly trading / investing updates. So I'll be covering markets in review as far as the past week and talking about markets in the upcoming week, because earnings is coming around the corner. And I want to make sure if you are doing either independently, you have what you need from my point of view, so I can be helpful. Again, it's educational. Take it as you wish. But if you do want a deeper relationship, you want that fiduciary relationship, give me a call, connect with me, ask me questions. I am here for you. Thank you so much. God bless. Have a wonderful, wonderful new year. And I look forward to talking to you all soon. Take care.